pick the right stock at the right time.
Good morning, you're watching Daybreak on Bloomberg Quint Live, India's first digital live streaming business news service. I am Agam Akil. Here are the headlines. Asian markets open on a weak note ahead of policy statement from the Bank of Japan. And HDFC Bank plans to raise 14,500 crores through a QIP floor price for the same has been set at 2,179 rupees per share. Axis Bank returned to profitability in the June quarter. Asset quality for the lender saw improvement. And rising fuel prices and forex losses led to IndiGo losing nearly all its profits in the June quarter. And four major Nifty companies report earnings today. Tata Motors, UPL, Vedanta and Power Grid are set to announce their earnings. Now, Wall Street stocks fell on Monday, with the Nasdaq suffering its third straight significant fall on worries of slowing growth in the tech sector. The S&P 500 and the Dow Jones Industrial Average declined nearly 0.6% on Monday. Tech stocks have been in retreat ever since Facebook last week signaled slower growth as it opens, or rather spends more on data security in response to criticism over the privacy policies. News-jammed schedule also includes a two-day Federal Reserve meeting culminating with the policy statement on Wednesday and, of course, a trove of U.S. economic data, concluding the July jobs for the report on Friday. With that, let's take a look at the Asian markets. And at this point in time, we are seeing the weakness come through for the Asian markets too. As you can see, the Nikkei is trending lower by as much as 0.7%, and the Shanghai is also down by as much as 0.2%. We're seeing weakness, well, largely in almost all the major Asian indices, so we're going to have to keep an eye on that one. But what does it mean for the SGX Nifty? Let's take a look at that as well. Well, as you can see here, marginal declines for now, nothing concrete. And whether or not we do see a sharp decline, that sharp sell-off that we've seen in the global markets for our own markets. But how was yesterday? When it comes to the benchmarks, well, the Nifty, along with the Sensex, continues its up move, and the mid-cap and the small-cap indices largely move in tandem with the major indices. As you can see, the small-cap index especially outperforming the broader markets. But when it comes to the banking index, it is the likes of Axis Bank, ICICI and SBI which have led gains in the Nifty banking index. Of course, the Nifty PSU banking index not too far away, considering we saw those gains in SBI and Bank of Baroda. Nifty Pharma and the Nifty private banking indices were also buzzing, all advancing in trade yesterday. But when it comes to the ADR picture, at this point in time, we're starting to see some weakness, as was evident in the global markets. HDFC Bank, Infosys, Vedanta, Wipro, all declining in trade in the markets abroad. ICICI Bank, on the other hand, continuing its up move, and Tata Motors and Dr. Reddy's, of course, among the others, which are also gaining in trade. But, well, as far as yesterday's day of trade was concerned, we really didn't see too much action. The gross numbers when it comes to institutional play were relatively smaller, and FII sold 234 crores worth of equity on a net basis. On the other hand, DI is buying just 49 crores, so not too much to speak for there. But let's take a look at the key contributors yesterday. And yesterday clearly was the day for the banking index. Namely, in this case, we had ICICI Bank, SBI and Axis Bank, as I mentioned earlier, were the ones which were leading trade, and Reliance Industries among the others, also keeping the indices buoyant. HDFC Bank, on the other hand, was actually bearing down on not only the major indices but the banking index as well, and it was the same for Infosys as well. But what does it mean for the futures and options space? And longs continue to build up when it comes to the Nifty futures. Let's take a look at the Nifty banking futures too, and that's where we're seeing another 7.5% increase in open interest. So longs certainly coming into play. When it comes to the maximum open interest across series, well, it still remains within that 500-point range of around 11,000 put, where we've had maximum open interest, and as you can see, 11,500 call. So it's the 500-point range that we are keeping an eye on at this point in time as when it comes to the Nifty. When it comes to changes in open interest, among the most active call options were well, I would say 11,300, where we saw writing in the call as well as the put, and more writing around the 11,600 mark. So, well, it's becoming a little more clearer that at least in the near term, we will have a lot of resistance around the 11,500, 11,600 mark on the upside. That said, when it comes to the put-call ratio, well, it remains largely unchanged at around 1.72, but the Nifty banking put-call ratio has moved up higher for nearly 2 puts in open interest for 1. Let's take a look at some other stocks which will be in focus. We have Indian Bank, of course. We've seen fresh longs coming through. And moving on, we also have fresh longs in Chennai Petro. On the losing end, we do have some weakness in, well, all right. So these are essentially the 2 stocks that we have in focus currently, considering that we saw the strength in the indices too. But with that, let's take a check on the rupee and the bond market. We have Saloni Dhanuka, who joins us with all the details. Saloni, good morning.
Good morning, Agam. So talking about Indian rupee first, it snapped its 3-day winning streak yesterday and ended marginally lower at 68.68 levels against the dollar. Now, while talking about both rupee and bond, they both ended little change ahead of Reserve Bank of India's policy meet, which is scheduled tomorrow. Now, the central bank is expected to raise the interest rates by 25 basis points. That's according to Bloomberg consensus. Well, on the global front, Bank of Japan will announce its monetary policy outcome today. Traders will watch out for if the central bank will adjust its monetary stimulus program. Well, it will be followed by US Federal Reserve policy meet, which starts today, and the outcome will come tomorrow night according to Indian Standard Time. Well, on Thursday, we'll keep an eye out on Bank of England policy meet. Now, the central bank is again expected to raise interest rates by 25 basis points. And well, speaking of the dollar index, it ended lower for the 3rd straight session yesterday. It trades well above the 94 mark, near 94.10 levels in the early Asian hours. Elsewhere, both euro and pound gained in trade yesterday against the dollar, with gains in the tune of 0.2% versus the greenback. And lastly, speaking of dollar rupee, now it is trading flat in the non-deliverable forward markets, which indicates a flat opening for Indian rupee in today's trade.
Saloni, thank you so much for joining us and giving us those details. But moving on to earnings. Missing street estimates by a huge margin. The country's largest carrier, IndiGo, posted one of its worst quarterly performances in over 3 years, with profits falling by as much as 97%. What were the factors at play here? We have Somit Sarkar joining us to give us more details. Somit, good morning.
Good morning, Agam. If you see, Interglobe Aviation, that is the parent company of IndiGo, reported a weak set of numbers in the first quarter of financial year 2019. Now, though the revenue was higher by around 13%, EBITDA, that is the earnings before interest, tax, depreciation and amortization and rental cost, decreased by around 47%, the highest year-on-year drop seen by the company since listing. Now, the margin stood at an all-time low of 15.8%, while the net profit plunged nearly 97% to 28 crore rupees. So, what led to such a weak quarter? Well, it was a mix of higher fuel cost, lower yields, rupee depreciation and higher other expenses that weighed on the financials of the company in the first quarter of financial year 2019. So let's look at these factors one by one. Now, in Q1, rupee depreciated by 4% compared to last year to 67.06, and because of this, the company reported a foreign exchange loss of close to 246 crore rupees, and that is because the most of the expenses of an airline company are dollar denominated. Now, second is the higher fuel prices. Now, aviation turbine fuel prices increased by around 27% compared to last year. Because of this, the fuel cost per seat kilometer was increased by around 30% to 1.52 rupees for the airline company. And it was not only the fuel cost that was the dampener for IndiGo, the other expenses were also higher in this quarter. The expenses were up by around 28% to 1800 crore rupees in the first quarter of financial year 2019. Now, this is all related to the cost. On the revenue side, if you see yields, which is the average earnings made by an airline company by transporting a passenger or goods, that declined for the second consecutive quarter, and because of the pricing pressure seen in the industry. In a strong quarter, that is the Q1, the company reported a yield of around 3.62 rupees per passenger per kilometer. Now, this is the lowest Q1 yield reported by the company since listing. Now, revenue in this quarter grew 13% on the back of the passenger growth. In fact, the revenue growth was at a lower rate compared to the passenger growth of 20% because of lower yields. Lastly, it was the higher other income in Q1 which aided the company to stay in green. Other income rose by around 51% to close to 306 crore rupees in the first quarter of financial year 2019, and because of this reason, the company could report a net profit of close to 28 crore rupees. Well, We have Shraddha here to give us some details about Axis Bank, which came out with its numbers yesterday.
Yeah, so Axis Bank, we did see no surprises coming in on the asset quality front, and you also had the net profit which beat estimates. So it came in at 701 crores versus an expectation of 624, and a huge loss of 2189 crores in the March ended quarter. We also saw recoveries and upgrades continuing at 2900 crores. The positive thing is the bank has increased its provision coverage ratio by 400 basis points to 69%. On the other hand, even if you look at the business growth, the loan growth was slightly lower at 14%, but retail advances now account for as much as 48% of the total loans for the bank. In terms of the asset quality parameters, we did see a decline of 4.6% in the absolute gross NPA number on a sequential basis. So the gross NPA ratio also came down to 6.52% from 6.77%. We did see slippages revert to moderate levels after the big spike in Q4. So slippages came in at 4,300 crores as compared to about 16,500 crores in the March ended quarter. The BB and below rated book also of the bank stood at about 10,000 crores as compared to 9,000 crores. So that has come off from the peak levels of 7.3%. And you did have the management saying that they don't see much downgrade in the below investment rated book from the current levels. They've also said that they haven't seen any new areas of stress emerge in this quarter, and that new NPA formation has moderated significantly, and they're hoping to get back to normalization of credit costs in the second quarter. So overall, a beat as far as the numbers are concerned, and positive management commentary also coming in for Axis Bank. But what do we have from Vedanta? We have Nikia for that.
Shraddha, thanks. Well, we're not expecting great quarter from Vedanta, sequentially at least, because we're seeing high cost pressures and shutdowns which are expected to impact the earnings of the company. If you look at the revenue, we're looking at a 26% downtick there as per the Bloomberg consensus estimates to a number around 20,370 crore. EBITDA is seen inching lower by as much as 15% sequentially on consolidated basis. Margins, however, are expected to be at 32%. PAT is seen lower by 53.7% for this company. And if you look at the other parameters, we're looking for aluminium EBITDA, we're expecting a decline of 18%. For power EBITDA business, we're expecting a downtick by as much as 28%. However, the growth is expected to creep in from oil and gas business, which is expected to clock in a 31% increase on a sequential basis, seeing a loss on copper division too. Zinc India also disappointed by posting a 23.4% downtick in its EBITDA business. Now, EBITDA is expected to be overall weak due to the pressures that we're seeing from Zinc India and international business. Combined with that, the closure of the copper smelter and Goa mining ban is expected to offset the gains which are expected to be seen on account of better realization seen by oil and gas business. However, key things that we like to keep an eye out will be an increase in oil sales from current levels and a progress on ramp up of 1.25 MTPA smelter along with movement in base metal price. Jayesh, what do you have for us?
Morning, Nikki. So we are expecting Power Grid to report numbers today, but as steady as it can get from Power Grid. Revenue is likely to grow about 14% at about 8,240 crores, while the EBITDA is likely to grow double-digit at nearly 7,200 odd crores, while the margin is expected to expand to 87% as compared to 86.3%, and the net profit is likely to grow in single-digit at nearly 2,292 crores. But as far as the other factors that we're watching out for, now there's a wide variety of reports which suggest the capitalization range could be approximately 3,500 to 4,000 odd crores, where the upper end of that spectrum suggests that it could be as high as 6,500 to 7,000 crores. In terms of the segmental performance, watch out for transmission revenue, which is likely to grow at about 15%. 10% growth is expected from the telecom segment, while the consultancy vertical is likely to post a 5% growth in their revenue. Also, the important trend to watch out for from the management comments will be the FY19 commissioning and capex plans that they have.
Well, thanks for that, Jayesh. But moving on to more earnings, robust sales in India is expected to aid Tata Motors in its first quarter, but it need not translate to a jump in the bottom line, as forex losses may take a toll. Yatin Mota is here to run us through the expectations. Yatin, over to you.
Well, we are expecting a volatile first quarter for Tata Motors this time. If you look at the consolidated earnings expectations, we are expecting a 21% growth in the revenues to be at close to 71,000 crores. EBITDA growth seen at 32.5%. EBITDA seen at 72,115 crores on an absolute basis. If you look at the profits, we are expecting them to be lower by nearly 71% to come in at 920 odd crores, and this will be on the back of the foreign exchange losses that we are looking at for the JLR entity. Margins seen at 10.5%, an improvement of nearly 1 percentage point on a year-on-year basis. Of course, we will be, looking at the standalone margins, which are expected to be at 6 to 7%. However, JLR would be in focus. We are expecting the revenues to be almost flattish at 5.7 billion British pounds. Net profits for JLR entity seen at 40 million British pounds, down nearly 12%. And margins also would be volatile because of foreign exchange fluctuations. However, the normalized margins are expected to be close to 9.5% versus a level of 7.9% a year ago. Clearly, this time we will be watching out for the foreign exchange, losses a bit because of the volatility in the currency, and not only that, overall commodity costs have gone up. Cost currency swaps have also seen some mark-to-market losses for most of them. In fact, Nomura is expecting a 250 million British pound foreign exchange loss for the quarter. And also the analysts are expecting that the JLR dividend this time will be boosting the standalone results. Of course, apart from the earnings, the management commentary on the domestic business, especially the commercial vehicle side, how do they see it in the next 3-4 quarters? And more importantly, JLR, and the demand in Europe and US is something on which we will, seek the management clarity as to how is the demand environment looking, how are the new launches doing, and how really is the Chinese market and the Sherry JV doing in China. These are the few points that we will be watching out for apart from the earnings.
Thanks for that, Yatin. But moving on to expectations from UPL, where it's India's operations may aid revenues in the first quarter on the back of pre-monsoon season. The top line number is expected to grow by around 9.6%. But what are the factors in play and that may aid or drag UPL's June quarter earnings? We have Yash Upadhyay joining us to give us the analyst expectations. Yash, over to you.
It is expected to be a stable quarter when it comes to UPL. Their revenues adjusted for excise, they are seen growing by about 10% to 4,080 crore rupees. EBITDA is seen up by about 8% to 813 crores. Margins, they are expected to come largely stable, about 19.9%, a tad bit reduction on a year-on-year basis of about 20 basis points, while the net profit, that is seen growing by about 7% to 506 crores. In terms of what's working for the company, it is the domestic operations. They are expected to do well on the back of expectation of a normal monsoon, while the LATAM division, that is expected to remain subdued on account of the high inventory and the adverse movement of the currency. So we've seen the rupee appreciate sharply as against the Brazilian real. What's also working well is the Europe, North America and the rest of the world markets. Margins, as I said, they will remain stable. The picture would have been much different had it not been the price hikes that the company announced in the quarter gone by. That apart, the higher tax rate, that is likely to restrict the profit growth to about 7%, while we would also be watching out for any management commentary with respect to the performance of the new launches and the share of branded products.
Yes, thanks for that. But what are the other stocks which will be in focus on the back of news? We have Shraddha Babla joining us back to give us that list. Shraddha, what do you have on your radar?
Agam, lots of earnings once again. I'm going to start off with Avenue Supermarts. Not surprisingly, they have reported a very strong set of numbers. Revenue growth of 27%, net profit growth of 43%. In fact, EBITDA margins have also expanded by 90 basis points to 9.3%. IDFC Bank was another one which came out with better than expected numbers. So net profit on a year-on-year basis has declined by 58%. But if you compare it to the Q4 net profit number of 42 crores, it's a multi-fold growth. Gross NPA also for the quarter has moderated from 3.3% to 3.24%. So better than expected numbers for IDFC. Oberoi Realty, you've had revenues and net profit grow by 3.4 times for this company, and margins have been retained at about 52%. On the other hand, it was a very big disappointment from Idea Cellular, where revenues declined by 4% and EBITDA dropped by a much sharper 54%. In fact, the company, however, has reported a net profit of 257 crores as compared to a huge loss of 960 crores in the comparable quarter in March. That's on account of an exceptional gain of 3365 crores due to sale of towers to ATC. But otherwise, if you look at all the operating parameters, be it ARPU or subscriber addition, all the operating parameters suggest weak numbers for Idea. And finally, you have HDFC Bank, whose QIP has opened yesterday. They've set a floor price at 2179 per share. That's close to the bank's market price. In fact, according to Bloomberg Quint sources, the QIP book has been launched to raise up to 14,500 crores, out of which domestic funds, the size for the domestic funds has been set at 2,000 crores with an option to upsize to 3,750 crores, and the balance funds will be raised by ADR issue to overseas investors. Remember, HDFC Bank had raised 8,500 crores from the parent company HDFC at an issue price of 2,174. So seems that the price is largely in line with what the street was estimating.
Shraddha, thank you for joining us and giving us those details. But there is a lot to talk about through the course of the day, and you'll find all the live market action on Bloomberg Quint. But there are also a few stories that you should consider reading on the website bloombergquint.com. Here they are. India imposed a safeguard duty on solar cells imported from China and Malaysia for 2 years, a move that's expected to increase costs and push up tariffs from record lows. And Samsung Electronics' net income fell short of analysts' estimates as slowing growth in the global smartphone market hits demand for its Galaxy devices, while Chinese rivals step up competition to supply displays. And Nokia OYJ won a $3.5 billion order from T-Mobile US Incorporation to build a fifth-generation mobile networks in the US, one of its largest contracts to date, and a sign that the network equipment vendors are starting to gain business from the new cellular technology. Now, investors are set to focus on the Bank of Japan's decision at the end of its policy meeting later on in the day. And we have Kathleen Hayes of Bloomberg News to tell us what we can expect in this report.
What people are saying is that he might want to do this because he wants to make sure that this aggressive monetary stimulus can be sustained. And the problem is that it has had some distortions, particularly in the banking system. If you keep your 10-year JGB at 0 and the very short end at just slightly negative, under 0%, you have a situation where banks, in particular the regional banks, we just heard Masaki Kano talking about the importance of the regional banks in Tokyo, the regional economy not as strong as the rest of Tokyo. Prime Minister Abe facing the big LDP elections in September. Maybe that's why there's a little more pressure on the BOJ to do something about a policy that is exacting a toll. Also, inflation is running at 0.8% year over year on the key core number. The BOJ's target is 2%. It had gotten up to 1% year over year. So if it's going to take longer to get to 2%, logically then you have to make sure that this aggressive stimulus policy is sustainable. That's why people are saying another reason why they might want to make a tweak. I think to a certain extent we may be getting down to semantics. It seems pretty clear after the reports or leaks started coming out of the BOJ that something was going on. There's a debate going on about making this kind of change. Just saying, well, we'll let it hurry up to 0.1% on the 10-year JGB and eventually maybe up to 0.2. Today, will they make official announcement that we are making a technical change in that policy? We don't know. Will Governor Kuroda get asked lots of questions at the meeting about this? After the meeting, I should say, the press conference? He certainly will.
Moving on, over 40 lakh people have been left out of the final draft of Assam's National Register of Citizens, which was released yesterday. Opposition parties have expressed concerns about the 40 lakh people who may not be considered as citizens of India. The Union Home Minister and the Chief Minister of Assam have assured all that those left out would have a chance to appeal and get their names on the list. But a number of questions remain. Largely, what happens to those who are excluded? Take a look.
The status of 4 million people in India hangs in the balance as the government did not include them in a list of citizens. The Indian government on Monday released a final draft of the list, which accounts for people living in the Assam region in the northeast of the country. Of 32.9 million applicants, the names of 28.9 million have been approved and included in the draft, according to India's Registrar General. The rest can file appeals before October. They must prove they entered India by the time Bangladesh was created in 1971. India says hundreds of thousands of people illegally entered the country from Bangladesh over decades and settled in the region. Bangladesh rejects that claim.
And with that, it's a wrap on this edition of Daybreak. But don't go anywhere. All you need to know is up next. Stay tuned in.